As a savvy investor, you should not have all of your investment in one sector, in one portfolio, in one asset class. There's need for you to diversify your investment in case of any unforeseen occurrence. So today we're going to be looking at 4 very strong investment asset class that the rich are diversifying their portfolio into. So number 1, we have gold. So historically, gold has been the earliest store of wealth and even means of payment. It takes time and excruciating effort to supply gold, from the excavation to the refining of the gold. Therefore, there's a limit to the supply of gold, making it very valuable. You have to know that the price of gold has never gone straight up. If you are investing in gold, it is always at a zigzag movement. It always goes up and down like a zigzag. But over time, over a long time, the price tends to break the upside. Gold is majorly to store and secure wealth and not necessarily to increase your wealth. So gold is a good hedge against inflation. It is a store of value, and you cannot easily produce more gold or easily print more gold as it is with fiat currency. So number 2 investment asset class I will be looking at is direct real estate, also known as physical real estate. Real estate can produce income and it has real value. It's a hard asset, therefore you can see, feel, and touch real estate. It is a hard asset that can work to produce income. I'm referring to real estate as an income generating asset here. That is commercial properties and not your home or any building that you live in. So I am only considering real estate properties that generate cash flow for investors. Number 3, we have foreign businesses. Investing in non-domiciled businesses is a way to diversify your investment. Just in case the stock market of your domicile country crashes, investing in foreign companies and foreign stocks gives more diversification to your portfolio. Here I refer to emerging and fast developing countries that you understand the socio-economic terrain and at what pace they are growing. So there are funds like ETFs, stocks, and indexes that will give you exposure to foreign companies, non-domicile companies from where you are living. In this case, we are talking about foreign companies that is not in Nigeria. So you can invest in companies abroad, say in Europe, Asia, America, North America, South America, be it wherever it is, that you have done your own due diligence by doing research on the economic trajectory of those countries, and you've seen that this country in the next couple of years that they are headed for a very good economic revolution. So if you have that hindsight, you can take that leap of faith and invest in some very strong, solid companies in that country. So over time, your investment will be sustainable and essentially it will generate more income for you as the economy of that country will be on the green side. So as I said, there are ETF indexes or stocks that could expose one to foreign companies like in Europe, in Asia, North America, South America, wherever it is, to be on the safer side. There are ETF that you can invest in that will give you exposure to the market of those countries. So we have a few examples that I'm going to highlight. There are ETF for European stocks. There are ETF for Asian stocks. There are ETF for African stocks. So I currently own a South African stock called Sibanye Stillwater Limited with ticker symbol SBSW. This company is in the mining sector. They mine lithium and other rare earth mineral. I have done my research and due diligence on this company, and I've seen the level and the magnitude of their mining. And I know that they are dwelling in very large scale mining, whereby they will start exporting their rare earth mineral like lithium. So they will be the top supplier of lithium and other rare earth mineral to countries in the BRIC Union. So you can also have exposure to European markets through ETF and indexes like ticker symbol VEA or ticker symbol IEMG. So you look at all these are European market exposure ETF. So the fourth asset class that the rich people are diversifying their asset into is cryptocurrency, more specifically Bitcoin. So Bitcoin is the latest asset class in the world. Bitcoin is created to be a digital asset, like gold is a physical asset. Bitcoin is used to protect oneself against inflation. It has a limited supply of 21 million Bitcoin, which makes its value to go up over time as lots of people and institutions are acquiring it, creating scarcity in the asset. Bitcoin has the most volatility amongst the other asset class mentioned, so it goes up and comes down quite asymmetrically over time. You can have it at $100,000 today, and by the next couple of weeks, you may see it plummet down to $50,000, or it could even increase higher up to $200,000. So the volatility is really high for Bitcoin. It is permissionless and borderless. That is, Bitcoin is not regulated by any government. Countries like El Salvador and Argentina have already adopted Bitcoin as a legal tender and currency. As an investor, you should be able to manage the risk and manage the upside too. So as fiat currency is slowly declining in value, this gives room for other means of payment, bringing digital payment systems into limelight. Example, a lot of countries are slowly moving towards usage of USDT and other cryptocurrencies as an alternate means of payment. Please note that in investing, there are several strategies. You should have a strategy and stick to that one that is suitable for you, considering your risk tolerance level, because in investing, the first factor to consider is the risk. You put risk before profitability, but trying to compromise on risk is very disastrous and it can lead you to a whole lot of losses. If you can just break even and not acquire any profit nor loss, I think that is a good deal than risking your principal. So as an investor, you should always consider risk before profitability. Consider the risk of your investment first before you think of the profitability. Because if you do it the other way around, you're going to have and set up yourself for disaster. Also, you have to always be abreast of the happening in your country or the economy in your country, to position yourself to capitalize on what is happening within the economy, to realize how it can create opportunity for you or adversely affect you. So I trust that you've gotten valuable information from this video by taking a cue from how the richest people in the society are diversifying their investments. And if you did get value from this video, please kindly subscribe to this channel, like this video, and share this video with your friends, colleagues, and loved ones. Thank you and see you on the next one. Cheers.